How you doing? Mike Natta here from Movement Mortgage. Just bringing you the tip of the day. So I want to bring you some advice on when you apply for a loan, 10 things not to do that could blow up your approval. So step one, you're going to get pre-approved. Some banks will send it to underwriting. Movement Mortgage does. We do a lot of pre-underwriting where we'll get all your paperwork, send it to underwriting before you go out looking. Other banks will just approve it at their desk and let the computer generate a letter for you, which is okay, not the best, but you really want to get it to underwriting. So what happens is once underwriting gets your loan, they're going to issue a commitment letter if it's approvable. That is based on stuff that they have already seen, your bank statements with your balances, your pay stubs with your current income, your credit report with your current debts. If any of this stuff changes, it will make your commitment letter null and void. And you're going to be out there shopping for a house thinking you're approved. You get your contract, you get appraisals, you spend money on inspections, you come back, send it back to underwriting for a real commitment letter, and bam, you're declined. Or you're not approved for as much as you thought. So I'm going to put this up for a minute here. These are my 10 commandments of buying a home, and I'll go through them quickly. And if you're interested, you can email me. I'll put it at the end of the video. So number one, do not change jobs, become self-employed, or quit your job. Going back to submitting your pay stubs and W-2s and tax returns, the underwriter has an understanding of what your income is in your job. In between application and buying the house, if you go and change jobs or quit or get laid off, you're pretty much done. Unless you immediately find a job in the same line of work, you're going to have a problem. Number two, don't go out and buy expensive cars and trucks and vans. If your lease is up, you may be better off borrowing a car or dealing with a one-car household until you close. After you close, if you can afford it, go out and buy a car. I've seen people go out and buy Mercedes in the middle of doing this, or trade in a Hyundai for a Mercedes, and their payment goes from $199 a month to $400 a month. Deal killer. It's going to affect how much you can borrow because you just change your monthly obligations. Don't use your credit cards or do not pay your credit cards. Your rate is affected by your credit score. So if you go ahead and skip payment in between, that can affect your rate dramatically. And every 4 months, credit reports expire. So let's say you get a pre-approval in April, and now it's September, you're going to go find your house, finally get into contract. We're going to have to re-pull your credit, and it's going to show you lates, and it's going to affect your whole approval. Don't omit anything from your application, like child support payments or judgments that may not be showing on credit. Most of these lenders have great tools and resources, and they'll find out everything about you. They'll know if you have a piece of land in the mountains in Iowa for half an acre, and they'll want to know what your taxes are on that, even if you don't disclose it. So make sure you tell the bank everything. They're going to find out anyway. Don't go out and buy furniture before moving into your house. I've had people go out and charge $8,000 worth of furniture, and now guess what? They have furniture being delivered. They can't close because they no longer can afford the mortgage payment, and just a big headache. You definitely don't want to do that. Don't go out and get tons of inquiries. So during your mortgage process, as I said, we're going to pull your credit. It's good for 4 months. Don't then go out and shop for a car and get the furniture and shop around for mortgages, because every time they pull your credit, it can affect you. There is some time frames within mortgage approvals that you can go with only one ding, but definitely keep a tight credit profile. That can affect your stuff also. Large deposits in your bank account. You're buying a house, you have money in different banks, so you're borrowing money from this person, you have money under the mattress. The underwriter is going to want to see your bank statements up until you close. And if you have large deposits, it's going to affect you because there's all kinds of government regulations after 9/11, and we are required for certain large deposits to source where they're coming from. And if you're taking money from under the mattress or your safe box, putting it in the bank, big problem. We might have to omit that money, and you might not have enough money to close, even though technically you do. What's next here? Don't change bank accounts. I have people that have 3 bank accounts, and then in the middle of the process, they want to change everything all into one bank so it's easier for them. It's a big headache because any money movement has to be checked out by the underwriter. So if you're moving money from bank A to bank B to consolidate it, and then you decide, you know what, let me keep it in bank C, it's a problem, it's a headache, it's going to cause you stress. Just leave everything put as the underwriter saw it originally, and you should have no headaches. And last, please don't co-sign any loans for anyone. We've had customers over the years that co-signed for student loans, and my brother wanted to buy a house in between, so I co-signed for him. That's going to blow up your deal too, because the theme here is any additional debt you take after your approval is going to affect your approval. So this is just a quick list. I'd be happy to email it to you. Mike Natter from Movement Mortgage. I'm located in Huntington, New York. I can do stuff anywhere though. And I'll put my email and my phone number below. Like my page here, and hope you enjoyed the video.